Mic check. What's going on, everyone? This is Jordan with Conquer the Markets. If you're new here, welcome. And if you're not, welcome back. We got a strong session ahead. I hope you watch it to the end. It's going to be very helpful, very informative. Looking here at a chart of the NASDAQ, we'll be looking at the NASDAQ, the S&P 500, the DXY, the dollar index. We'll be looking at gold and, of course, Bitcoin and Ethereum. And if we have time at the end, we will certainly also take a look at oil, crude oil. It'll all be very relevant. Let's start over here with the NASDAQ. By the way, price currently right now is 23% off of the lows. That is pretty, 26%, we'll call it, 27%. Do you remember back when the Fed had their last peak in the rate hikes? The last rate hiking cycle, that was December 2018, the last hike, and price was able to rally up 35% and make a new all-time highs. This little section over here is very relevant. What was going on over here? What caused the markets to just melt up? Was the economy strong, or was it facing a slowdown and a recession during this period, 2019? We were seeing growth. The economy was very strong, right? Is the economy seeing growth right now? Is it very strong? What about inflation? What was inflation? Was people talking about Yamato Queen saying that inflation is way down today? Inflation is, we got the print in, expectations was a 5% year over year print, and it came in 4.9%. I mean, Yamato, I don't know about you, but I look at that as per expectations. That's not a miss. That's not a beat. That's right where forecasted for sure. If you look at core CPI month over month, that's up 0.4%, exactly as we said, because of looking at those energy. Now, Yamato, you can't be so emotional. It's investing. Make sure you stay on the right side. And we look at CPI month over month, and that's in line with expectations. Year over year, inflation is flat, and anyway, that's neither here nor there. By the way, did you see what the market did this morning with this data? A repricing going from yesterday, a high of 22% chance of a 25 basis point hike, and now pricing in a likely pause. That means that this hike over here, now we have a lot of data ahead of us. We got PPI this week. We got CPI next month. We got non-farm payrolls next month, ADP jobs. We got a lot of relevant data that is going to cause this, as we get closer to that June 14th meeting, to either go ahead and be pricing in 50-50 chance, a probability of a 25 basis point hike, or that was the last pause. Markets still do not know yet. This piece of data was basically as per markets already expected. Relevant though, because we're talking about the last hike, and the last hike of the cycle in December 2018 saw the equity markets here, NASDAQ raised 35%. It's already up 28%. What's the difference over here? Why did it wait until the last hike of the cycle here before you saw risk rally? And why has risk already rallied significantly? It's very clear. I hope we have it. Oh, let's bring it up on the board. You can see as you go towards December of 2022, just a few months ago, you saw a lesser degree of rate hikes as hikes went to a 50 basis point hike. And then February, March, and May all saw a 25 basis point hike. So you saw here a lesser degree of rate hikes occurring. Equity markets have already begun rallying off of it instead of the last hike. Now, it's important what happens on the pause. I have said this going back into the middle of 2022. One of the most important events that I'm watching and looking for will be when the Fed does pause the interest rate hikes. I want to see what the market's reaction is. It's an enormous tell. If the markets are able to rally, that is a good sign. And they have the ability to go ahead and even take out all-time highs. You saw it happen over here. But if the markets sell off on the last hike, well, then likely expectations for rate cuts coming into the end of the year are going to prove to be correct and sound as we are looking at maybe. Remember last week we said, when I said I think that we might have already entered a recession in this quarter, second quarter 2023. Now we won't know until we're out of it, but let's take a look over here at Stan Druckenmiller. Billionaire investor says we're on the brink of a recession and face a hard landing as the Fed basically wasted all of our bullets. I want everyone to understand I'm not predicting something worse than 2008. It's just naive not to be open-minded to something really, really bad happening. Stanley Druckenmiller, let's get into it a little bit more. There's a lot more bodies coming. He's warning of a hard landing. He blames it on the Fed. Free money making people do really stupid things. Stanley Druckenmiller thinks the U.S. economy is teetering on the edge of a recession, predicting a hard landing and warning there's a lot more bodies to come. Stanley says he is having a really hard time to come up with an accurate economic forecast. If you remember, I have been repeatedly stating that these are unprecedented times. No one's ever seen this playbook before. It is different this time, and it calls for a large degree of caution in how you proceed. Do not be so, let's say, confident or firm in what you believe is happening, and rather take it from this vantage point, the standpoint that you're not exactly sure what is happening and what is going to happen. And that will give you even a greater edge from staying on the right side of the markets. And we're going to be looking strongly at TA because nothing more than technical analysis is able to keep you on the right side, even more so than now. He blames it on the Fed, slamming Jerome Powell's Fed, right? So there's stuff under the hood, right? We're starting to emerge. What kind of stuff is he talking about? He's talking about the regional banks going under. He's also talking about Bed Bath & Beyond, but he assumes that there's a lot more bodies coming. Now, is it possible that the Fed has engineered a soft landing? If you remember back in 2022, I was throwing out there that, listen, the economy is a lot stronger than everyone believes. It's going to take a lot longer things for break. That didn't change until right before actually we saw Silicon Valley Bank go under. And I was starting to say, well, now the whole, let's say, idea of a hard landing is really beginning to be a lot more probable. Let's see what happens. And I don't think that was it. I said, watch what happens in the fall, because I follow the liquidity. You've seen a lot of people lately talking about what's going on with liquidity, and they're pointing to, like, we're going up now because you got to follow the liquidity. Have you taken a look at the Fed's balance sheet lately? Because I remember just a few weeks ago, as we saw the balance sheet rise, that a lot of people said, well, the balance sheet's going up. You got to watch what's happening. And before the balance sheet began to go down, also, what a beautiful awareness that CTM bring in here. We talked about when things break, it'll likely look different than a lot of people believe. And it'll likely be, or could be, similar to what happened here in September 2019. You could see the balance sheet began rising, and you could see that's what caused the melt up. The one difference between this period and what's happening now is the balance sheet is no longer rising. Quantitative tightening continues to run, and liquidity is going from a pace of going up and now flattening out and beginning to roll over. My concern is once the debt ceiling debacle comes to some type of conclusion. Because at that particular point in time, the U.S. Treasury, which is currently counteracting the effects of quantitative tightening, is going to go from a place of counteracting that, right, balance it out, to actually pulling away liquidity themselves. I call it double tightening. Lynn last week began calling it a double whammy tightening. Watch out. I am concerned about what could potentially happen in the fall. This is what else. Let's keep moving over here. I want to get back to Stan. He's saying that he's criticized U.S. fiscal policy, We've wasted all our bullets in an economic expansion. Worrying about the fiscal situation is a scary cocktail that we're presented with. He added he wouldn't be surprised if the bean counters a year from now find that the recession started in the second quarter. Stanley looks like he's watching CTM live streams. Stanley, if you're here, big shout out. You're a mentor to me. You've been throughout my whole career. I don't know that, but I do this for a living, and I got to have a forecast. And it's true. A lot of people look at different types of ideas, different types of analysis, and they're very black and white about them. A tried and true investor who's been doing this in Stanley's case for over 30 years, myself, 20 years, you have to take the approach that while you have and form your ideas, you have to be ready to change them when presented with new information and in a heartbeat. Djokovic, the tennis player Djokovic. I mean, I was a fan of, for the longest time, Federer. I was I can't even think of the name. Nadal, huge fan of Nadal and his sportsmanship throughout his whole career. And I was never a fan of Djokovic until recently. Actually, my wife was always a fan of him, and I would always be poking her, giving it to her. And then last night she showed me some type of, I don't know, Instagram of him doing something, and it was very nice. And I was like, he's the best ever. And she couldn't take it. She can't take how I could, when presented with new evidence, change my mind. And obviously we saw what happened last year when Djokovic was not allowed to play, whether it was the US Open, the Australian Open, and whatnot. And you know what? You just got to get behind people who are fighting the good fight. That's all I have to say about that. Let's go over here. I am in gold and silver right now. They have historically not done well in hard landings. I don't know about that Druck at all. Hold on one second. I'm not meaning to go against the Druckster over here, but let's take a look at what happened. I can't mess this up. Hold on one second. I could. All right. Let me clear the chart with you, and I want to show you something very interesting. I think it's very relevant. So let me start over here. The last crisis. We saw a massive crisis in March 2022. It was over here. And gold, by the way, because it was rising into the event, and it came off 15% here, right? Fed came in, they expanded the balance sheet, started quantitative easing, and gold did really well out of it until everyone realized that because of the massive expansion and the easy monetary conditions, that we were going to be looking towards a period of growth. And when you're looking towards growth, gold does not perform well. And then people left the gold and went elsewhere. But that was only a 15% correction. We saw every market basically correlated to one. Bitcoin was off 62%. We saw a massive nosedive on the S&P 500, the NASDAQ. I think gold held up relatively well. And if you were just zooming out a little bit, it was definitely headed in the right direction. We saw another one in 2008. Now, during this crisis, gold saw a deeper correction. It saw a 30% correction over here. There you go. You can see that 30% correction that gold saw during that period. And this was a difficult time for a lot of people to figure out what was going on. There's no question. You zoom out, though, a little bit, and you could see that, gold just basically reverted to the mean during that period. I don't know. I think that actually during hard landing scenarios, gold is actually a good place to hide out and to be, but I respect other people with different opinions. And actually, when someone has a different opinion than myself, I actually want to take a deeper look at that. So even though I just showed you two recent events, 2008 and 2008, you could also say that, gold didn't do very well. I agree that. I see that. 2020 was quick and over. Will it be like that next time? I don't know. I think that I would like to take a deeper look at that myself before making any type of formulating any type of opinions or anything like that. But looking at gold, it continues to be running in this 12-year bull run, 12-year consolidation, and what looks like to be a nice cup and handle forming over here. Gold has not yet broken out of the pattern, but that entry should have been, it was a swing trade for CTM over here. The entry is coming out of the candle. If you take a look at the peaks over here, you can see where I'm touching, bang, bam, boom. And then follow the horizontal line over there. You could see that's really where on the breakout of the cup and handle that we've seen in 2023, you could see that line of resistance here was confirmed into support right over there. And this looks healthy. If you're looking for a breakdown in gold, we still got a ways to go. The simplest way to do that, we have it on a weekly chart. It's not pulled up here right now, but is just connecting these two lows and looking for that type of sell impulse. And as long as gold stays above that, I would say that why it's smart to sell resistance in a downtrend, this is an uptrend that we're currently in. Gold is just off of kissing the sky here for new all-time highs. Generally, as an instrument is making new all-time highs, it's not the time to be looking to go ahead and fade it. And, again, sell off of resistance in downtrends, buy off of support in uptrends. A lot of people looking to be heroes over here. Maybe they will be right, but I know you got to put as many edges in your favor as possible. One of those is trading with the trend and not against the trend. Let's take a look at the NASDAQ over here, and you can see, just looking at some TA, I want to get in front of you and show you that what we've seen happen in the last 24 hours is price come in and test. You can see the breakout over here failed, back above it, and this time holding this broken resistance as support, getting above the second one, and is currently, I don't know. It's still kind of iffy in my opinion. It's still rather neutral. Trying to, do you hear my tone? I'm trying to make the bullish case for it very strongly. A lot of people are very bullish this morning all over the place. We're going to get into a very close look at Bitcoin and on Ethereum to find out exactly how we should be positioned and what they look like. But at this point in time, I think that you're either holding and extending a period. I don't see taking a new position up here. We got resistance above us. And more importantly, we've got this line over here. We got this trend line. This is the only line of caution that we have on the chart right now. As long as price is above that, the bullish breakout above the purple continues. Hasn't been easy, I don't think. I see a lot of sideways price action happening on the NASDAQ right here, right now. We'll see, though. A lot of people are very happy about the stationary CPI print, and we'll see whether or not that has any staying power or not. That's all I could say about that. I want to look at the S&P 500 with you. Let's take a look at the S&P 500. S&P 500 is now red on the day, and we got this big line over here. This line at 4,200 is going to come very clearly into our analysis in just a moment. So I want you to take a note of that in your mind. Also, what I want you to do is go ahead, if you haven't yet, at any point in time you enjoy being here, go ahead and hit that like button. Really, really, really. Is this Stanley? Absolutely. Legend. So anyway, the D is for Druck. I knew it. So S&P 500, it's got resistance over here. It is sell impulse triggered on the purple line. One test, two tests of the support. I think that consolidating underneath resistance in an uptrend is quite bullish. I do think that's quite bullish, but the only line to worry about over here is further out of play. It's that red line over here, this sell impulse line. And I think that for me, even though I missed this, you see this little wedge pattern that I'm highlighting? This should have been the buy entry. This should have been the buy entry off the bear market trend line. Here's the bear market trend line, right? Here's the breakout of that. And then you can see the sell impulse come into play. But that broken resistance, it held that support here. And even here, this was a very close, but you see all the wicks below it, but it held barely. Good awareness of a really strong trader would have had taking out of the descending wedge the line right there. I missed it. It was CTM's awareness who helped me on this trend line right over here that I'm highlighting. See that it's time to get long on the breakout above there. And since then, price is not really doing anything. It had the sell impulse over here as well. That's an uptrend though, so just be careful. I deem it to be quite neutral, but I am going to point out that consolidating underneath resistance in an uptrend is often quite bullish. I would give it some room over here. The red line is where we would be looking for any type of breakdown. And, you could take spike into it, 1, 2, 3 cracks at it. I mean, you could argue that the resistance is getting weaker, or that if the bulls can't make the break above, actually it's the reverse and it's going to roll over. I don't know. Neutral is not a bad place to be. And by the way, over the last 6 weeks, markets are really kind of neutral anyway. I said 6 weeks. Markets have gone nowhere. So listen, when there's no trend, to have some type of deterministic outcome is kind of, I don't know. Same thing over here. You got resistance above us over here, watching that sell line, and that's all fine. I want to take a look at the dollar at the end of the session. We're going to come back to the dollar a little bit and look at that a little more. I'm going to start going ahead and picking up speed, and there's a lot to talk about in all of this. So we'll take it up tomorrow. At the end of this session, I want to try to show you a very accurate look at the dollar. For now, you could just see we need to get back here for a buy impulse. What I wanted to do is show you what the sell impulse looked like. I'm going to go ahead and clone this trend line. I'm coming out all the way to, do you remember over here? This was a very scary moment for the dollar bulls. We held bullish, and then the dollar milkshake theory actually happened. We became bearish down over here. Some beautiful stuff. So I just went ahead and took the clone trend line off the bottom of that move. And now I'm coming into real time right here on the daily. And you could see why yesterday I put in more of a horizontal line as looking for a potential breakdown and next leg down. Our linear 12-year trend line is offering a better view in my point. I'm just going to go ahead and highlight that a little bit more so that we are aware of that going forward. That looks to be the breakdown, and dollar here consolidating, getting ready for either a breakout or a breakdown. As King Dollar goes, so should the markets. If you've seen Peter, Game of Trades, I consider Peter a friend and highly respect his analysis. Peter is, by the way, one of the few, I supported him. It was over here in this area where he was talking about signs that the dollar was getting ready to roll over. A lot of new analysts out there really got suckered into that. So good awareness. Peter's talking now about this potential channel, and he's talking about coming up towards the top of that resistance, and how in all past bear markets that has ended badly, showing here 2008, 2023, and the similarities. So I want to look at that with you a little bit and quickly. By the way, and this is all fairness and has nothing to do with being right or wrong. It simply has to do with being aware, and especially of analysis that is contrary to your own. By the way, there is nothing wrong if you're a trader and investor with being wrong. Actually, the quicker you are at realizing you're wrong, the better, because then you're able to go ahead and cut your losers short. When you first started investing, when you first started trading, you heard the timeless adage, cut your losers short and push your winners. It was likely one of the most important pieces of advice you ever heard in your whole career, but likely you did not pay it enough attention. I hope that you do today. Now, at this particular time, you could see that showing that the trend line, the bear market trend line, the breakout, and thinking that it might be a bull trap. This time is not different. Well, that's not entirely true. This time was a lot different, and so much as that what we saw over here was the breakout, right? This is when we said, or it was said that this is a bull trap and it's not different. We just said we like kind of like closed our eyes and held our nose and jumped into the water, the cold lake water. Like whether you want to do it or not, it's a buy repair that's taking place in the markets. And price came up, and then once it broke out above this purple line over here, at that point, if you were thinking this is a bull trap, you got to cut your loss somewhere. I would imagine by this breakout over here, you had to do that. Here's the thing though, this pattern is not necessarily wrong. Now, you could see that why this didn't roll over here. It could very roll over at any point in time over here. You could see this wedge that I've highlighted. And if price were to break that sell impulse that we looked at earlier, I would be concerned that maybe this pattern is playing out. It just didn't happen as originally suspected. And that's what makes trading entirely difficult, because a lot of things rhyme, a lot of things are similar, but it doesn't always play out exactly as per your expectations, which is why you need to be fluid, because timing is the hardest thing. So what you want to do is, what CTM was saying, this is a buy repair that took place. This was the second buy repair that took place. And why the markets are 28% off the top, that's not 28% move. That's, taking the sweet spot of it. But that's the right side, and we want to stay on the right side. And if we get a sell impulse, we want to get on the right side and say that even though we had two buy repairs, well, we're still in a downtrend, and now we're seeing a resumption back down of that downtrend. And just even if that happens, that doesn't mean that you hit new lows or test the lows and then dump down. That could be a test of the purple line that then resumes off and an uptrend reestablish itself. It takes work. And even though you got to formulate forecast and ideas, you have to follow price and stay on the right side. Let's take a look at that channel. I think that this is the S&P 500 now. We're moving from the NASDAQ to the S&P 500 because that's the work that Peter was sharing over here off of the S&P 500. And I'm trying to go ahead and emulate the same line that he did. The way that I did that is I took a parallel channel and I'm starting off of these and connecting these two lines, right? So I'm going to get that exact in 1 second. And then bringing it up, right? And you might want to go to the top over here at first, right? That's a good look over there. I'm going to just extend this down now, trying to keep this in play. And you can see there's a little space, but that looks like a wick. I'm going to go down to where price was finding resistance over there and touching over there. And I think that's a good look. And what you're looking to do if you have this type of analysis, because if this is a good look, but you have to talk about where it's invalidated if this time is different. So you're looking for invalidation points, right? So you could say that, well, if you're in a downward sloping channel and you're looking for rejection of resistance, that's one thing, but where's it wrong and where do you have a breakout and what does that breakout do and how does that make you change your analysis? So it looks to me like the breakout would be above this channel, and we could come back over here and look at the S&P 500 as we were earlier, and we could say that, well, we have this level of resistance right above us. That's around 4,200, the magic whole number over there, psychological number, and a breakout outside of this resistance, and then clearing and closing above 4,200. That would probably invalidate that pattern. And that's good awareness, and I think that's the way to go, except I don't think it's that easy as well. Let's take a look, and I just wanted to make sure that I drew this in as accurate as possible so that I have a good look at it, and I think that was the best I could do. And then I could take a look at the Nikkei, right? Or I decided this morning I wanted to take a look at the Nikkei, and if you go back to 2008 and you do that same thing, and Peter showed us the S&P 500 in 2008, I'm going to start over here and I'm going to, well, hold on. I'm going to do a lot better than that. I'm going to come over here and I'm going to draw it like this. I don't really like that look. I want to get it. I like to be exact as possible. So sometimes it takes more than one, attempt at it. And I'm going to go with this, and I'm going to say, well, that's what Peter's talking about. We're coming into this area over here, and it held as resistance, and it looked bad. But do you remember the lost decade in Japan? And this started in 1990, and I just want everyone to be aware that even if we break out above and break above 4,200, where you would say, well, that was wrong, which is true. That's wrong. You have to have a stop loss. You have to know where you're wrong, and getting it back above this next area, I think that opens up a potential next leg further upwards, as long as we're holding this trend line, the red one. I could get rid of the balance sheet over there. Now, jumping back over to the Nikkei and looking back at what happened, well, here was a breakout to the upside of the channel. You can see the breakout, a retest, and why it wasn't able to resume upwards. This was, say, that was an invalidation, but price did roll over. And not only did it roll over, it wound up making significantly lower lows. And the whole purpose of that is just to talk about that it's not that easy. And it shouldn't be easy. But the more awareness of you have, and someone could say if price, breaks out over here, you were wrong. Maybe. I mean, likely you have to have a stop loss here. That is keeping your risk small and giving the opportunity to push your winner. But even if you're wrong, it doesn't mean it won't play out. And similar to this over here, I could say, well, this was wrong. We didn't on the breakout roll over, but it might wound up being, because this was over here when that was produced, and it didn't go like this. But price might do that eventually. So you have to be fluid, and that's a little bit of a good lesson right now. John, I'm glad you're here. It is good you're here. And that's the perfect lead into Bitcoin. Yesterday, we were looking at price flirting with the downward support. The lower highlighted darker line over here. Price thus far is held. We talk about, for those that are very active, they might be looking on the taking out of yesterday's high, looking to establish a long position. If they were doing that, they're looking to take some profit as we come towards this resistance. And that I would not do that. I deem this to be no man's land and neutral, and still do. A close below here, that sets off the opportunity for a breakdown and a test of the 25,200. Really important broken resistance. Hopefully now support. If not, we'll be looking at support below it. And then over here on the upside, still waiting for it to see if we get a breakout above the last repair, the resistance above 29,000. And this downward sloping trend line. Again, different people like to play this different ways. And if you were looking to go ahead and you're, it's not a bad trade. And it's just for those that are more active. I'm looking here and I'm staying neutral, waiting for a resolution of this consolidation that's happening. Breakout to the upside or breakdown to the downside. Ethereum is much of the same. And all we did yesterday is we took this bottom trend line and we cloned this trend line over here and then set it up for where we were finding resistance. Same analysis, breakdown over here or breakout offers the next opportunity from my vantage point to look to go ahead and establish any type of discretionary opinion or trade. Raz has a pretty good look at that. He's looking at, if you're following the analysis coming off the S&P 500, he's changed it a little. I have the bottom line over here. So he's got the touches down over here. Let me go ahead and highlight that a little bit so we can get a better look at it. He's got the trend lines over here, the touch of the US banking crisis, and then cloning it up here, you could see the touches that are occurring. He just took a fractal, right, of previous price action coming in from this area and overlapped it. And if we saw a breakdown from that line we were just looking at, here's the pendant that's occurring. Potentially, we could see a move, right? And there you go. It's right around that 25,000. So we have a confluence of support in that $25,000 area. He's showing it from a different look, and I like it a lot. Good stuff over there, Raz. Very good stuff. We're flat on Bitcoin, CTM 2.0, 8-hour time frame. is not set correctly. Let me go ahead and come to real time with you. I'm skipping all of 2023. All right. What does that start? Why am I starting here in September? All right, that's fine. And we are currently sideways, position neutral on the market, waiting for that breakout to the upside. If that were to occur, we would be very close to establishing a buy position if that were to occur. We are closer to taking longs than to shorts. We would still need to see price, which momentum is headed upwards, roll over before looking at any shorts. But right now, out of the market, a super strong place to be. Also on Ethereum, out of the market, just like Bitcoin, very close to establishing a long, rightfully so, in an uptrend, right? Closer than a short. Momentum would need to roll over before looking at any shorts. And Cardano is holding a short, right? Cardano, you could see, well, that's actually, the uptrend never happened. There was a slight bounce, but that looks weak. And we're kind of sideways here. And because of that, we're already tacking on the downside on Cardano. Much the same. Oh, by the way, I believe we're closer to roaring in the bliss, making those new all-time highs. If you have not yet for this session, hit the like button. Lots of alpha shared here. Please go ahead and support my work and the channel. Hit that like button. Daily time frame, we still have Ethereum short and Cardano and Bitcoin both out of the market. Daily time frame off to a fantastic start. 2023 on Bitcoin, as Bitcoin here has been leading the way to the upside. There was extended losses after we've seen a further drainage of the Strategic Petroleum Reserve. 6 straight weeks in a row. That's come off of the back, by the way, ever since OPEC went ahead and made those production cuts, right? You go ahead 6 weeks ago. This is April 4th, and you can see that massive gap up. That's where we've seen since the White House further draining the running out of reserves. When they run out of reserves, what happens if I move this over here? If what happens when they run out of reserves and they begin to refueling it? Look, right now we're seeing, I thought it might be because of the oil looking and sniffing out further slowdown, and it could be. We are not seeing really China's recovery take off yet. And if it were to, that could put further demand for oil and commodities and cause inflation to kind of rear its head up. Right now, people are looking at not only, let's say, flat over year, month over month, inflationary pressures, but believing that to mean that deflation is just around the corner. That could be, but again, stay flexible. I don't know what happens next. Maybe we start seeing some type of rise in oil if once the U.S. finish draining their Strategic Petroleum Reserve, and then we're also looking at further demand, and we're following the technicals, and for sure we're short, and that's a sell impulse, but subject to change. I'm going to cut this session short here. Head Snack, who has been a massive supporter of this channel, going ahead and designing the Conquering the Markets theme song over here.
Markets, analyzing the charts, hitting projected targets within the margin. Find the flow, sip the matcha, and wait for the waves to come in with lobsters. The kind-hearted Jordan Fosters, working smarter, not harder to move the markers. On his way to conquer, trading and investing, drinking the coffee while reflecting.
Massive supporter of this channel, and I want to offer our support as well, as he's about to premiere. 1 minute from now, he's about to premiere his new video. Restrictions end. Do the secret handshake. If anyone here wants to join me, please go ahead, click on the link just shared in the chart, as Head Snack is going to be 1 minute from now premiering his video. And that way we could offer that love and that support back to someone who's really supported our community. So everyone, I'll see you over there. And until tomorrow, have a beautiful, beautiful day. Thanks for being here. Thanks for participating in this. Everyone, have a fantastic day.